money, mergers, and cage-free eggs. We're talking about the investment climate of money pouring into agriculture in this episode of The Business of Agriculture. Hey, Damian Mason here with a question before we hop into this episode of The Business of Agriculture. If you farm for a living, you employ a lot of amazing technology, from your inputs that you put into the soil to the tractor that you sit in, your combine, and the amazing data that it harvests. But has your soil analytics kept up technologically with everything else in your farming operation? I would venture to say that no, it is not. Sure, you check for your nitrogen, your phosphorus, or potassium, your micronutrients as well, but what about disease pressure? Do you know what diseases and what pests you're going to face next year? No, you don't, but you can now figure that out with Pattern Ag's predictive analytics. Think about it. They can tell you now with testing what the likelihood of facing nasty diseases, things like cyst nematode or sudden death syndrome, what the likelihood of you having this in your field, then you know how to prepare, how to treat, and where to invest your money. It's using technology to make you bigger yields and therefore make you bigger money. Go to www.pattern.ag to learn more. They are pioneering the way in predictive agronomy. Hey there, welcome to another fantastic episode of The Business of Agriculture. We got a great one for you today because, after all, it is the business of agriculture, and business means money. I've got somebody on here who's going to talk about the money that's coming into agriculture. What's it looking for? What mergers, what acquisitions are being sought out? Is there the kind of money there was a couple of years ago? Cage-free eggs, well, we're going to use that as one of our examples about how legislation creates new opportunities. We're also going to talk about what the entire climate looks like for investment pouring into your industry. I got Max Bremer. He's with Saul Ewing, a national, shall we say, business transaction group of attorneys, law firm with offices all over the country. And his PR person put this out to me, and I'm like, you know what? Cage-free eggs, is the demand really increasing? And I questioned that. And I read through some of the topics that he wanted to cover. And I said, I absolutely really want this guy on my podcast. And maybe we'll get around to all of that. But the main thing is, give us the quick and dirty, my friend. And thanks for being here.
Yeah, well, thanks, Damian. I'm looking forward to it. So just by way of background, you did a pretty good job. But I'm a business transaction lawyer. And mostly what that means is I help, my clients execute sophisticated corporate transactions, mergers, acquisitions, divestitures, joint ventures, et cetera. And while I work with clients in a broad array of industries, including, healthcare, medical device, health IT, manufacturing, distribution, et cetera. A big and growing part of my practice has been agribusiness, food, beverage, agribusiness. I don't know if you mentioned, but I'm in the Twin Cities, Minneapolis, Minneapolis fortunately has a lot of significant players in the agribusiness industry, and as a result, that's a lot of the activity up here happens to be related to that. So that's sort of kind of how I've been sort of introduced to the industry. My clients are in that space. And so as I've been working with them over the last several years on either their buying businesses, selling businesses, in agribusiness, I've become familiar with some of the trends going on there. And so that, I guess that's what we'll talk about today.
Well, here's my assertion, impression. I don't know, use the right word here, perception. A lot of money poured into ag starting, I don't know, call it 5 years ago. And then we had this amazing thing happen in the production ag. And production ag prices at the farm gate do drive a lot of what happens upstream, downstream within ag. I mean, if you're selling technologically advanced weeders, or you're talking about new seed genetics, whatever that thing should be, a lot of it all boils down to what's the actual ag sector look like, and that comes down to farm income. Well, 2021, 2022, 2023 are three record-setting farm income years by leaps and bounds, and it's in both nominal and real inflation-adjusted dollars. And so you had this thing where tech money was looking for somewhere to go. And you can even go back to, Beyond Meat, which is an ag company. It's a food product. I oppose it. I don't want to eat the garbage, but it's an ag. They came out in 2018. and their stock price was bid up. Now it's down 95% from what it had been. So you see these different things where money was pouring into ag, I don't know, 10 years ago. And I think it hit a zenith a couple of years ago. But there's still obviously money that wants to be in ag. And it is now the play that there's a lot of startups, a lot of tech, biologicals, those kinds of things. Now is the money, instead of looking at new technology, looking at merging, consolidating. Because usually when you start seeing a contraction in an industry or a contraction in the income, then there's a push for consolidation. So you kind of give me that perception. Am I right that money started slowing down and is less chasing technology, and now there's more of a view, let's go with consolidation and merging versus expansion of technology?
Yeah, I think you're right. I mean, your perception is right, and at least it's consistent with what I'm seeing. And frankly, I was looking at some data recently just in terms of, investment in the industry. And actually, this is, not unique to ag, but venture capital activities. So, what you're talking about in terms of the technology investments has slowed down the last really the last year to 18 months. And the merger and acquisition activity similarly, where, either a strategic is buying another company operating in this space, or a private equity fund might be buying an operating company outright. That activity has slowed, and what the ag industry is experiencing, which is not dissimilar from the broader market, but we're going to talk about ag here. Is there, there's been some economic uncertainty, of course. Interest rates are higher, and so the cost of doing a transaction or making investment is up. There are, some global uncertainties with what's happening in the Ukraine and elsewhere, and of course we've got an election coming up at the end of this year. So I think there's some uncertainty in the economy about, generally, although, maybe we haven't had the recession that was predicted, that there's just some general uncertainty that I think is causing some of the investment activity that we were seeing 2 years ago, let's say, to tail off a little bit. And my expectation, my hope is that will change here in the next few months. Maybe if there's an interest rate change, that will sort of drive some activity, but we'll see.
Max, 54 years old. I've been paying attention for a long time. I started reading and paying attention to media when I was like 10 or 11 years old, really. And you just said, well, there's a lot of uncertainty in the market. I think I'm not sure there's a month, sure as hell not a year, since 1980 that I have not heard there's a lot of uncertainty in the market. So I think at some point we say this again and again and over and over and over, and we pretend that somehow these market conditions are so remarkably different than those market conditions of a year ago, day ago, month ago, decade ago, whatever. Am I right? Is it really a little over? I know that sounds jaded, because now I've just taken every CNBC talking head and basically said, you're useless, because I've been hearing this every day, month, year, decade. Well, there's a lot of uncertainty in the market. I mean, is there really that much uncertainty in the market from what there was 1 year ago, 1 month ago, 10 years ago?
Well, in some ways, I mean, there's probably less uncertainty there than there was a year ago, right? I mean, a year ago, or maybe 18 months ago, all we were hearing was about sort of the impending recession. Yeah. That was on the horizon, and the question wasn't sort of whether it was coming, it was when it was going to hit and how bad it was going to be. And sort of the general economy, I guess, has weathered all of that sort of anticipated negative news. Now, I don't know whether we've sort of hit the safe landing that everyone was anticipating or not, but in any event, it sort of appears that a recession hasn't happened and it's not coming. So in some ways, there's less uncertainty in the economy than there probably was 18 months ago. Yep. But, interest rates are still high, and they're still, I mean, again, every 4 years we have an election. We're going to have one here at the end of this year. And so, there's who knows what will be the outcome of that election. But you're right. I mean, that's not unique. That was the case 4 years ago. It was the case 4 years prior. It was the case in 1980. So, Yeah. So yeah, we do have these sort of cycles, but there's, but yeah, I don't know that this time is all that different from other times. But at least what I'm seeing in my own practice generally is that the market has slowed down from where we were 2 years ago, where it was
the market. Okay, that's where I want to go. So the market to you, to clarify, doesn't mean commodity markets, doesn't mean stock market. The market to you means the money that comes to you and says, help us buy this thing.
Right. Well,
that's the market.
Yeah. Yeah. Not to me. I'm not a broker, but right. Where my clients are saying, hey, we want to buy, we want to buy this business, or we want to deploy capital into this industry, or we want to make this investment, that is not as active as it was 18 months ago. And that's
So sure. What's interesting is, and you just said I'm not a broker, so I want to ask you how this works. How the transaction, because this is something that I think many of us read about, hear about, but a lot of folks that are listening to the Business of Agriculture podcast are saying, how the hell does this actually happen? So I want to get into that. Before I do, some of you might notice I'm wearing a Truterra hat. Truterra is one of my sponsors here. Truterra is in a space that can help you, if you are a landowner farmer, diversify your revenue off of every acre. You know what? You've heard about sustainability programs. That's what they do. Truterra can get you involved in and paid for a sustainability program. Strip till, nitrogen reduction, conservation practices, cover crops. That's what they can help you do. If you want to learn more about how you can make money on acres that you already are farming, a little extra revenue wouldn't hurt in a year like this. Go to TruterraAg.com. Truterra, Truterra, TruterraAg.com. Check it out. You're not an investment banker.
Right.
So, an investment banker is always just brokering deals, putting together deals, and then they make their money on the advice, on the cut, sell, whatever. You're not an investment banker. So do you still have does an ag entity come to you and say, we're already in talks to buy this, now you got to help us through the legal hurdles? Or does a non-ag entity come to you and say, we've been positioned, we've got $100 million to spend, and there's this poultry producer over here in southern Minnesota, we're gonna buy him, walk us through it. How's it work?
Yeah, so both, but more often I'm working with a client who has already identified a company they want to buy, or maybe they're going through a sale process and has already identified that partner, and they come to us and want us to help them execute that transaction, from helping to negotiate the terms of the deal, the structure of the deal, help them through the due diligence process, and then help them on legal side largely get to a successful closing. Occasionally, somebody will come to us and say, "Hey, we're looking for this type of this type of company we want to buy, or a product or whatever. Do you know? Do you have anybody in your network who might be, that sort of fits that profile?" So we will get sort of brought into those situations, but that's not largely what we do, and it's not really what we get compensated for.
Right.
What do you get compensated for? It's a service of, if you're in the industry, I mean, honestly, I sort of look at it as, we're sort of if you're going to be in the industry, you try to help and support others as much as you can, and make connections that are useful. Some ways that are, we're not directly benefited by that, but it's sort of part of being a participant in the industry.
Got it. All right. So we talked about what is happening. So money's drying up, or the flow has certainly moved, maybe not to a trickle, but it's definitely slowed down a lot going into new ventures, technology, all the stuff, And frankly, I got to tell you, I think it flowed in for a long time, and I can almost say, where the hell are the results? We're supposed to have driverless tractors, we're supposed to have autonomous fertilizer buggies. We're supposed to have a lot of stuff going here. You and I are recording this Q2 of 2024. For all the money that poured in, what's the result? And then the next thing is, where's the money going now?
Well, I don't know that I can comment on the result. I would say, I mean, maybe
you can comment on the results. Okay, I already did comment on the results.
Comment on the results.
I'm fascinated by the technology we have, but I don't think the if you give someone $1 billion, if you give me $100 billion and I give you a calculator, you're going to say, yeah, that's all right. That's kind of a letdown. And that's where I think I am on the pace of ag technology. Yes, it's impressive. My God, look at it. But for the amount of money that's trickled in, that's not trickled, that flowed in. It flowed in, like geysers. I don't know that maybe it's just not there yet, and all of a sudden it's going to be it's ready to bust through the next dam. But it doesn't seem like it's made it. I don't think that we've seen as big a result as I would have hoped for.
Well, yeah. I mean, but if you if you look at sort of the application in other industries as well, like, we haven't really solved all the healthcare problems we intended to solve with all the money that's been deployed into healthcare. And
that's government, though. That's right? Government.
And so, but it's government. It's also private capital that's gone into fund, technology things that have not made. We haven't sort of solved all the problems there. We haven't solved all the problems in agriculture. Although we've made, there's a lot of things that agriculture ultimately will need to solve, because you're feeding the world, right? And there's a lot that will need to happen there that has not yet happened. I'm not a technologist, so it's sort of hard for me to comment on that. But I wouldn't say the capital has dried up. Because it exists. It's just sitting there waiting to be deployed in opportunities that are, when investors view that the return is sort of commensurate with the risk they're taking. And right now, I think, interest rates probably are a big part of preventing, to the extent debt is part of a transaction capital structure. It's more expensive to do a deal now than it was, 18 months, 24 months ago.
So you're thinking
that's a part of it. And I think some of the, sorry to mean to cut you off, but I was talking with a client recently, they're a big ag player in this space. They make a lot of in part of their business, they make some venture capital investments. And they are, and they have a number of investments they've already made, and rather than looking at new investments right now, they want to make sure that their own portfolio companies, that they have the capital preserved to invest in those companies to weather whatever the storm is that might happen over the next 6 to 12 months. So instead of making new investments, they're kind of hunkering down, waiting to see how the next 6 to 12 months play out, make sure that they can properly capitalize their existing investments, and then kind of reassess.
Got it.
So that's some of what I'm seeing happen in the market now.
All right. So you can't tell me specifically what you're working on, but we teased out cage-free eggs. That's one of the things that your PR person put out there about what's going on. Why are cage-free eggs something of an example of what you think is going on in terms of investment trends in ag?
Yeah, and so this sort of counters a little bit of what I was talking about in terms of uncertainty in the market and in maybe the lack of slowness of M&A activity generally. But in the ag industry, you've got some other things going on that are driving interest in M&A activity there, and largely, some of this is being driven by state legislation, which is mandating that eggs produced and sold in their states come from humanely cultivated eggs, however they define that. Largely, cage-free infrastructure. So there's a number of states that are either already have that legislation, including California and Massachusetts. There's some others that will be coming online within the next year or two, and I think a number of others that are sort of thinking about that. And so some of that is being, state legislatures responding to their own constituents who are demanding this. Some of it is, responding to lobbying efforts. Others of it is just responding to, and some of it is driven probably to a certain extent by consumer demand.
Okay, so money, I know some investor people that, sit and just look at at places to put money all the time, and they talk about where the puck is going. And some of them are very agnostic. They don't get into politics. They just say, well, it looks like there's going to be this legislation, so let's go over here and invest and deploy cash over here because this legislation is going to make it good for us. Or, hey, here's this trend line. So how much of it is legislatively driven in terms of your clients versus trying to predict the marketplace consumer trends?
It's certainly a part of it, but I mean, it's, if you're predicting the marketplace trends, and legislation is saying, hey, these are the only products that you're going to be able to sell in our state, and California is a big market, right? And so that's going to have that's going to impact demand, kind of the demand side of it, regardless. But there's also, big, large companies have made pledges, cage-free pledges, that they're only going to be selling cage-free produced eggs at, by a certain date. And you're also seeing some, consumers, I guess, voting with their wallets and buying that type of product as opposed to conventionally produced eggs.
It's my understanding. So it was a long time ago, like almost 10 years ago, somewhere around 7 years ago, Kroger came out, McDonald's, Taco Bell, which doesn't really use a whole hell of a lot of eggs. But McDonald's gets through a lot of eggs, and Kroger certainly retails a lot of eggs. Said, we're going to go cage-free. I think it was by the year 2025. Maybe it's by the year 2024. Either way, it's right now or next year. And the production industry said, crap, we're going to start converting. And I remember reading this like 5 years ago. The industry said, we better convert. So a bunch of producers looked at barns that were already kind of, getting depreciated out and dilapidated out and said, the next barn's going to be cage-free because that's where we're going to command this premium. And there was a premium for a while. Then it's my understanding that we hit a point where there was so much cage-free production that the premium went away, that like 1/4 of the eggs you're buying conventional at Kroger might have been actually produced cage-free without getting the premium. That was my understanding, and I got told that by someone in the industry just a couple of years ago. You, before we hit record, said you're not sure that's the case anymore because production's caught up. Help me out here.
Yeah, and to be honest, I don't really know the answer to whether Kroger is able to meet its sort of, if there's sufficient eggs in the market to meet that demand. I do know that, not all of the facilities in states that have cage-free legislation have been converted. I do know that, that there's sort of in other states, there are, people who are thinking about converting who have not converted. And a big part of, obviously a big part of that is the cost of converting. And so that's not insignificant to undertake converting from a conventional operation to a cage-free operation. So, anyway, I think to get to where we need to be, my understanding is the market is about 30% right now. I could have that wrong.
Okay.
I think the last time I saw data on this, that approximately like 30% of eggs today are in that range, are cage-free as opposed to conventionally, right? So there's still, to get to 100%, we've got a long way to go if that's ultimately where we're going.
All right. So here's the thing. Let's talk about, first off, if that's all about a conversion, I don't know where the merger and acquisition happens other than there's some entity that is really good at making cage-free eggs. And then another egg producer says, crap, we don't want to convert. We're going to buy them. Well, there's only like 36 companies that control 90% of egg production in the United States. So I can't really imagine that there's rampant amounts of mergers and acquisitions happening within egg production. I can see it in other places in ag, but not in egg production because it's already pretty damn consolidated. Am I right?
Well, yes, but you've still got some other producers, even larger producers who are in some states who are saying, I don't want to undertake the cost to convert. Or, a family operation where, generationally they're thinking about kind of what's the next step here? Who's going to operate this business? Do we want to make the investment we need to make? or is now a good time to sell? Is somebody else, some either private equity fund or strategic buyer in this space, might they be interested in buying our existing egg operation and making the investments that need to be made to convert our existing facility to cage free? And so, some of the clients I'm working with are viewing this opportunistically because they have relationships with some of these, some of the egg producers today who are in that situation, who are thinking, am I going to transition this to my kids? Am I willing to make that investment myself? And so that's where I'm seeing this come up.
Okay. And then I want to find out then also about what you are seeing, and then also how a merger and acquisition even works. I want you to do all that from the legal standpoint. Before I do, dear listener, here it is, 2024. And Redox has been with me as a sponsor this whole year, and I'm really happy about it. You've been hearing a lot about all these bio companies, biological, this and that. Well, you know what? Redox was in the bio space long before all the biologicals. They've been around for 30 years, and it's not biological. It's a bionutrient. Redox is helping farmers shift from traditional fertilizers to carbon-based technology. Redox products been around for 30 years, started out in specialty crop, moved into turf, now more and more in broadacre agriculture. Out of Burley, Idaho, Redox Bionutrients provides superior nutrition, abiotic stress defense, root growth, soil health, and efficient nutrient uptake. You can find out more at redoxgrows.com. Redoxgrows.com. Check it out. Talking about using fewer inputs to get bigger output on your acres. That's what you need to do. Check out redoxgrows.com. How's it work? What do I need to know? Maybe somebody's listening to this right now and they say, I want to expand. I want to buy. What do I need to know? What do I need to do? Or they say, I am one of these ag companies that, I don't know anybody to pass it on to. Maybe I'm in ag tech. Maybe I'm in light manufacturing. Hell, I don't know. I mean, you see it all, right? We threw out cage-free eggs because it was an interesting thing for the title, but the reality is you see all kinds of things.
Right.
So tell us what you've seen and then what anybody would need to know.
Yeah. So let's look at it maybe from the perspective of somebody who owns a facility today, an egg production facility. But I guess it could be any type of business who's thinking, hey, I don't want to make the investment I need to make, or maybe the next generation isn't up for it. They want to do something else, or
maybe the time is right to sell. Maybe the time is right to sell because I'm getting overtures, and it seems like maybe I should consider this.
Right. So you're, either, player, it's a relatively small industry. A lot of the, the big players know every. So, often these things take time. The clients I have who are doing this successfully have developed relationship, especially if they're on the buy side, that they've developed relationships over a number of years. And so they already know the owners of the business. The owners trust them. They trust the owners. And when a time comes up to have a transaction, it's sort of natural. But if you haven't already established those relationships, often you'd be engaging some kind of broker. You mentioned an investment banker to kind of help you think about, one, what you can get for your business, and two, then have them kind of run a process to go out and help identify the buyers. You create a competitive process, and they identify buyers who are interested in your business. And we, often we get brought in at that time to kind of help a seller think through how do you best position your business for a sale? Who's going to be attracted to this? What if there's any sort of weak points in the business? How do we try to clean those up now before you go to market and sell, so you can maximize price and make it most certain that you're going to get to a closing, which is really often what a seller cares about. They want to make sure they get to the closing. They want to get the most price, and when they want to reduce uncertainty as much as possible.
Yeah, interesting. So where do you think your work, how will the category change for you? You talk about what the market looks like. Well, what's the market look like moving forward in 2024 from what it was a year ago in terms of the types of deals you're doing?
Yeah, I don't. So, in terms of types of deals, I imagine that they won't change that much. I think, if there's an interest rate a positive interest rate change in the next couple of months, that will likely free up some pent-up demand. That I think.
You say that, but it's my understanding that there's still boatloads of money sitting around, and if you're doing it on cash, what the hell difference does it make whether we're talking 8% interest or 6%?
Well, right. If you're doing it all on cash, maybe not a lot, but most of these deals do involve debt, and I think just sort of the favorable movement will probably. I think people are waiting for that, is my sense. But the percentages matter. Everyone would prefer to pay less in interest than more.
There's no question about that, but I'm not convinced. I've been hearing that we're going to see that. Remember, I also called bullshit when they said inflation was transitory. They began that whole talk during the COVID thing, which at the same time they're telling us that if you walk one way down an aisle at Walmart and wear a mask, you're not going to ever get COVID, which was not true. Then they also told us that inflation was transitory. And I said, I've never heard that word in all my economic studies, which of course means temporary. I'm like, well, everything's temporary. Cancer's temporary. So cancer is transitory also until it kills you. So inflation that began at the end of 2020 was supposed to be, or mid 2020 was supposed to be transitory. Here we are 4 years later and it's still bad. Interest rates were supposed to be a temporary fix to fix the inflation. I don't see interest rates being markedly lower 1 year from now than they are now. About a half point, maybe one. I don't see that being enough to move anything.
I mean, you're probably right that they won't come down significantly.
What about my point on cancer being transitory if inflation is transitory? You like that one too, don't you?
Yes, I think you're right. It's transitory one way or another.
It's transitory. It's transitory.
Either you beat it or it beats you,
or it kills you.
Right. It doesn't last forever.
So really, interest rates are up 100% from where they were 2 years ago. You can say, when I always tell my people that don't think about money, they said, well, from 4% to 8%, it's a 4% move. I said, no, that's 4 points, but it's a 100% move. You doubled the cost of money. Well, if it comes down just a little bit, you're still up, 100%. So it's kind of like when retail stores, triple the price of something, then mark 20% off it. I mean, if interest rates go back to 7.3% or something, or 6.9%, you're still talking about significantly higher interest rate cost than it was, cost of money, that is, than it was just 2 years ago.
Yeah, but I think my sense is that there are good deals to be had that are waiting to be done because they can be done cheaper. So, if the expectation is I can do it cheaper in 3 months than I can do it today, I'd probably wait 3 months. Now, I suppose if the interest rate environment can continue, if it's going to continue to decline, right, then people might sit and wait for the next reduction, and then the next reduction and the next reduction. So I don't know, maybe that'll be a self-fulfilling prophecy, and we'll kind of never get there because people are continuing to wait for interest rates to decline. But in the meantime, there are still good deals to be had, even at interest rates in the current environment.
That's where I want to go, because this is where we're going to get out of here on this whole topic, where the good deals are. By the way, I'm different, and maybe this is why I'm entrepreneurial. I think if you wait around thinking, oh, this is a really good deal, but I'm going to wait until the interest rates go down, then the deal goes away. You're like, gosh, wonder why that went away. Because if you sit around and let good deals, now I think if you see something that makes sense, you should buy it, period.
Right. Yeah. The interest is not, if your deal is predicated on, sort of is not good under the current interest rate environment, but is better, is good at, one interest, that's probably it's not the right deal.
Right. What is a good deal? What's going on right now that's a good deal? Get me out of here.
Well, again, so
we asked the question. I'm going to do it another way. My friend Rob Syke and I, who is an ag entrepreneur, Canadian, we don't hold that against him, and part-time Arizonan. We recorded an episode in the summer. He came to visit me on my farm, and we were talking about money in ag. And so we posed a question. If I had $1 billion, a little play off of the Bare Naked Ladies, if I had $1 million, which is a Canadian band.
Canadian, yeah.
Said, if I had $1 billion, where would I put it in ag? Or even would I put it in ag? So let's ask you, because that was recorded like in August. So here we are recording this Q2 of 24. 8 months down the road now. I gave you $1 billion. I know you're not the investment banker, but you see deals. You're the legal side of all these deals. I give you $1 billion, $100 million, whatever the number is. Where are you going to put it? In ag.
Gosh, if I was smarter about investing than just helping people, I'd probably be doing that, to be honest.
Yep.
I don't know. I mean, I do like. I'm excited by what some of my clients are doing in the. I still think eggs are a good business, but it's not sexy. That's
eggs. Sure. Eggs are not sexy, no. And you know what? The margins, I didn't, they used to make like 2 cents an egg or a penny an egg or something. But now with this inflation, eggs are up 70% from where they were, or 50% depending on the price cycle we're under from just a couple of years ago. So you still like eggs?
Yeah, I mean, I sort of like where the market is headed generally. I mean, it's expensive to convert to cage free. It's the cost of operating a cage free operation, I think, is higher than. Yep. But you do get a premium on the eggs, and that's where the market is heading. And so for now. Yeah,
that's true. Okay, I'm going to keep throwing other things at you. Beef processing, meat processing. There was a bunch of federal monies tossed out a couple of years ago because we decided that the big four, and then we had, the pandemic shut down some meat, and we had some supply issues. Do you see money coming into meat processing for mergers or acquisitions?
I don't, just because I guess my clients are not in that space. So
if I gave you a bunch of money, would you put money there?
No, because I don't really. I mean, if I were to follow Warren Buffett, I'd invest in things I know about, and I don't really know beef processing, so I probably wouldn't. That's nothing against beef processing, but I'd want to understand. I just don't know.
Got it. We call this money, mergers, and cage-free eggs. Get me out of here and tell me what else I need to know that we didn't cover. What's going to happen in the rest of 2024? All right, you kept saying about interest rates. What's going to happen in 2024 that anybody needs to know? You said the money's not dried up, but the spigot is definitely flowing more slowly. You said some it's predicated on interest rates getting cheaper. I don't really see that being a market difference. So what's going to happen between now and the end of the year?
I think sort of the time pressure of some of the state legislative mandates is going to drive additional activity. So either people will decide to invest in cage-free, people who have not yet made those investments, operators will decide to make those investments and convert, or investors will have to enter in and either invest in those businesses or buy them outright.
On the poultry production or egg production, since it's so few players, are we going to get down to where it's like 5? It's only us. Isn't it only a few dozen right now that really control 90% of the eggs? In Arizona, it's Hickman's, and my part of the world, it's Roseacre Farms in Indiana. How many are we going to get down to?
Well, not, the Justice Department will ultimately probably weigh in on that too, I suppose. They don't love consolidation in any industry, but so yeah, that's part of the analysis here too that we didn't even really talk about, but that's something buyers especially need to think about, is how the Justice Department would view, especially if you're one of the largest players in the market. We don't need to name names, we kind of know who they are, but they're going to have that's sort of a focus that they need to have as well.
There's an argument right now. Kroger and Albertsons as grocers, are trying to fuse, and the Justice Department's holding them up. But even fused together, it'd still be about half the size of Walmart in terms of grocery sales. So they're saying, why the hell are you trying to prevent us from fusing? So I wouldn't say the Justice Department's and the way that the methods of which they mete out their judgments are necessarily unbiased or fair.
Yeah, agreed.
All right. Well, there we go. His name is Max Bremer. He's a business transaction attorney for an entity called Saul Ewing. If somebody wants to go a little deeper, they have a question about this because they need the legal side of it, how do they get a hold of you?
You can. I'm on our website. You can call me 612-225-2957 or email me Bremer, Bremer, at sol.com. But my bio's on our website.
Good deal. All right. So we talked about money, mergers, and cage-free eggs. We talked about the investment trends in agriculture. You tuned in here because of the business of agriculture. Remember also this show that you love so much is brought to you by True Terra Redox and my friend at Pattern Ag. So check out their websites if you want to go a little deeper with them also. His name is Max Bremer. Thanks for being here. Till next time. Thanks a lot, Max.
Thank you, Damian. It was a pleasure.
Until next time, thank you for being here, dear listeners. 300, almost 350 episodes in the can. Go back and check out some of them. They're great things to share, and I always try and get good guests. If you have a topic you want me to cover, please shoot me an email. I promise you I look at them, and we will see if we can get some more interesting topics that I've not covered that you'd like to hear more about. Till next time, thanks for being here. I'm Damian Mason, and this is The Business of Agriculture. Hey, thanks for being here. This episode of The Business of Agriculture was brought to you by Pattern Ag. You've heard me talk about Pattern Ag because I think it's a pretty cool concept. New technology that allows you to predict the problems you're going to have and therefore treat them before those problems cost you money. What kind of problems am I talking about? Pests and disease. Things like cordon rootworm, sudden death syndrome, cyst nematode, and a whole bunch of other bad things that happen out there in the field that can cost you money. Guess what? Pattern Ag will let you find out ahead of time if the disease or the pest pressure is there, and therefore you're treating it before it costs you any money. What a great concept. Go to pattern.ag, that's www.pattern.ag, to learn more about their product, their technology, how it can make you money, save you yield, and also where you can find a rep that can come out there and do the work for you. Pattern.ag.